Hi all, welcome back to our series, Day Trading Explained. We are now 2 hours deep into our series. So eight 15-minute chapters, that's 122 minutes, actually a little bit less. So what let's recap what we've covered so far. An introduction, we explain how great and glorious the US equity markets are. We explain how basically the markets work and how can you make money day trading, how you can lose money day trading, how you can make money investing, how you can lose money investing. We talked about the risk that should be assumed per each trade, that basically trading is a business and each trade is a business plan. And then we got deeper into the discussion which out of the 6,000 stocks that are in the markets as a day trader you should look for. I mean, there are too many stocks. You cannot focus on 6,000, not even on 50. Then we talked about earnings and how earnings in stocks can lead us to perfect day trading candidates. And then we talked about how to build a screener and how to build a stock list. This is obviously super important if you want additional trading candidates to complement the stocks that are reporting earnings and others that are of your personal preference. And in the last chapter, chapter 8, we discussed how to use a smart screener, which is one that we posted here in the class, and hopefully some of you will use it. I suggest you use it. Really use it, and it will do wonders to your performance, to your day trading performance. Okay, let's move on now and go actually a little bit back because we talked about basically now how to gather stocks to trade, but we didn't talk at all about pressing the button. So now in these following chapters we're going to talk about really the real aspect of trading, which is pressing the button. But before we're going to talk about pressing the button, we need to talk about a super important indicator that is roaming or basically hovering about the US stock market, which is the S&P 500, or in its symbol, tradable symbol, SPY. So if we're talking about an important ETF, which is an exchange traded fund that everybody follows, is this one, the biggest of all, 500 stocks, not in equal weight. Okay, so you want to check out the weight, you go to Yahoo Finance, and it's going to print you the most important stocks in this ETF, and you know already who they are. The most important stocks are the Nasdaq leaders, plus JP Morgan, some banks, and some energy stocks. Those are, and maybe a healthcare stock here and there. But overall, it's Apple, it's Nvidia, it's Facebook, it's Google, it's Microsoft, and maybe I missed and Tesla, and maybe I missed one stock, and Amazon. Those are the leaders, and some energy stocks and some financials. Okay, so now let's talk about the importance of the S&P 500. Why is this index so important and we use it instead of other indexes? Because it covers 500 stocks, and it's very reliable in terms of predicting what is the direction of the overall market. So this is the market, 500 stocks, the S&P 500 is the market. So where is the market going? When you ask yourself as a day trader, what is the market doing today? Is it trending up or down, or is it flat? So this is very important for you as a day trader to have an answer to this question. Okay, of course you can look at the daily chart, and you know now if we're looking at the daily chart of the S&P 500, we see that we are in a clear uptrend. We broke over this let's call it 600 level, and we are now trading at all-time highs, and over the last 1, 2, 3, 4, 5, 6, 7, 11 trading days, there is not even one was red. Although there is a red day, but it was a gap up, so it actually closed I think positive over the over the previous. But let's go with 10 and 1. Okay, so that's a clear uptrend in the S&P 500. So that definitely prioritizes the longs in the market. Now, what kind of longs? We talked about looking at your stock screener, looking at earnings. For example, Nike, obviously it was a long, and looking at the power screener that we talked about. And in that power screener, if you remember, I think I showed it to you two videos ago. There was a ratio of 10 to 2 or even 12 to 2 in terms of longs versus shorts. So there are only 2 shorts showing and 10 longs. Why? Because there is a dominant force in the market right now, 2 longs. Obviously it can change. It can change very, very fast. Now, again, the S&P 500 is answering the question, what is going on today in the US equity markets? And if the index closed, as you can see here, on Thursday, hold on a second, this is it, up 0.8%, obviously the trend was positive. Now, most of the time, the price action in the S&P 500 is not 2 to 3% or 4% mover. Okay, most of the time it's going to be 0.5%, 1%, 1.5 to 2% is already a huge winning day. The same goes for the downside. Okay, and sometimes the index won't move much. It's possible the index is going to go through a phase where it moves sideways for 4 or 5 out of the 6.5 trading hours. What do you do then? Do you trade as a day trader? Do you stay out of the market? Or do you go in and look for what we used to call a couple of videos ago, the extremities, if you remember this term. So again, the idea here is that you as a day trader need to find all the time the best day trading stocks. And those day trading stocks don't necessarily depend on the S&P 500. Of course, if the S&P 500 is trending higher, you want to join and look for longs. Don't look for shorts if you have a clear uptrend and strength in the market. The same goes for the opposite. If the S&P is going to a sell-off stage of 2 hours or 4 hours or whatever, and you observe it, don't go and start buying, okay? Because things won't work against the S&P 500, or most likely won't work. Now, the bottom line is that the S&P is the mood of the US equity market. So it tells us what to do. If it's going up, we should follow his lead. If he's selling off, let's follow its lead to the downside. The question is what happens in the middle. And there are many, I don't know if there's 25% of the time or 30% of the time where the market is actually not doing much. Whether it's in the lunch session, in the late session, it can be even in the morning session. The idea here is that you as a day trader have the tools now using stocks that delivered earnings, using your watch list, and using stock screeners, including the one that we are promoting, to find great day trading candidates. If you cannot find day trading candidates, okay, so you sit out an hour or 2 or 3 or maybe a day. It can happen, highly unlikely, but it can happen. And again, the idea is not to force any trade. As day traders, we're about trading, but nobody's putting a gun to our head to trade one trade per day or 6 trades per day or 8 trades per day. By definition, we try to avoid, calling it a day trader must trade 5 positions per day. No, it's very personal. Okay, if you feel confident, you trade. If you don't feel confident, you don't trade. Obviously, the idea is that you trade. You're not gonna come home with fish if you don't go out to sea and throw your net and try to bring in fish. So that's pretty much the analogy that I wanna bring in here. So again, nothing, you cannot and shouldn't go out if the sea is rough and maybe you will drown. That's not the point. There will be another day. So there is another day in trading as well. So the concept here is that you have a watch list, and you need to build a watch list that includes the S&P 500 and the most dominant sectors in the US marketplace. And if you have a list, you can take a screen picture of it, or you can email us and I will send you the list. Basically, it means that all those sectors in this list are important. Now, again, if you look at what happened Thursday, it's clear that this sector, TAN, that's Invesco solar energy sector, was the best performer, up 4%, nearly 4.5%, while the S&P barely made it to 0.8. So there will be a lot of winners coming out of this sector. And you need to make a list of some stocks from each sector. So from the TAN sector, if you remember, we traded, we were looking at the trade in SE Solar Edge or Sunrun. And if you're looking at US global airlines, the jets, you have Delta and American and United and Southwest. And in the financial ETF, you have JP Morgan, Goldman Sachs, Bank of America, and Wells Fargo. In the NASDAQ, which is another important indicator, you have basically all the market leaders. IWM is an indicator of small caps, and that can also be a place to look for trades, but being that we're not focused on small caps, I will put it aside. So industrials, which are the best stocks that are governing this index? Maybe it's a Caterpillar, maybe Boeing. Then we have actually the most important of all ETFs, that's the VanEck sector for semiconductors, where NVIDIA and Taiwan Semiconductors and Broadcom and Intel and basically Micron, all the leading stocks from that sector are hovering in there. And this is definitely by over the last 24 months, the most, 12-24 months, the best and most important sector. Then we have utilities, not that important. Consumer discretionary, not that important, but Nike is here. Biotechs, iShares Biotechs, IBB. Energy sector, which used to be super important a couple of years ago. ExxonMobil, ConocoPhillips, and so forth. Chevron, and Chevron Texaco, and I don't remember, and Halliburton, and so forth. And we have, of course, we have the healthcare sector. And again, just make a list, a watch list of 2 or 3 stocks from each sector that will be the most important. And then over time you can, you don't need to use the list, because you look at the sector and you say, okay, the jets are up 7% today, or maybe I'm excited. Let's say they're up. Okay, I'm looking for a trade in United, or maybe looking for a trade in Delta. Or the opposite is semiconductors are very weak. They're down 2.5%. Maybe you can short NVIDIA, or short Micron, or short Broadcom. So that's the recap of sectors and the S&P. I would have to say that you need to devote a small chart to watching the S&P 5-minute all the trading day, all day, every day. Watch the S&P 500 5-minute, in order to answer yourself or get the answer of what is the market doing. Okay, I think it was enough for this chapter as well. Thanks for being here with us. Please like, subscribe, and we'll see you in our next video in a bit.